And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand, but you got to keep in mind that Bitcoin is smart, fast, strong money. You can't teleport your $10 million apartment to Singapore, lever it up 10 to 1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs. Bitcoin's up 44% a year on average since then. The S&P is up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Michael Saylor shares his latest prediction for Bitcoin and why he's bullish heading into 2024, largely due to BlackRock's significant influence. There's growing confidence that, in the near future, we could witness a massive influx of capital into Bitcoin, aligning with the strategy Saylor has long predicted. The story has gained even more traction in 2024 with the introduction of Bitcoin ETFs. Thousands of institutional investors across the US are now purchasing Bitcoin, driving demand for the leading digital asset far beyond the daily supply, which has been cut in half. This has created an unprecedented supply-demand imbalance, and according to Saylor, everything is about to change.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
You know, Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%.
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million, but what is it 5 years from now? You're in your 4-year calculus.
You know, it's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8% because it's always going to be a more global, open, free capital market. Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or NVIDIA stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P is up 12%, and since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy. We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity. And then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral. If you're investing in the ETF, you're getting 1-for-1 performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual.
Embracing unwavering enthusiasm for Bitcoin, Saylor confidently predicts explosive growth on the horizon. With BlackRock and other crypto giants making bold moves, Saylor assures that a long-anticipated surge is on the way, expected to unfold as we approach the final quarter of 2024.
It's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities. In the near term, whoever's got the most money can decide whether it correlates or non-correlates. It's like, again, I can lever it up 20 to 1 on Saturday night, and I can trade it long or short.
Worst case scenario of something that would happen in a leverage situation like that with the Bitcoin ETF?
I think what happens is people offshore trading on Binance with 20 to 1 leverage get wiped out on Saturday night. They're the degenerate crypto traders. On the other hand, what you want is a free, open capital market. Everybody can trade it any way they want. And so if you're going to hold it for more than 4 years, you're going to get superior performance with that volatility. I think this administration's been fairly conservative in their embrace of the crypto economy.
Right.
They want to go slow, carefully, deliberately.
But do they want to go or do they not want to go?
Well, before Gensler entered office, the rhetoric was even more controversial. After Gensler entered office, you heard Jerome Powell, Christine Lagarde, Gary Gensler all say Bitcoin is a speculative digital asset. And that was actually a move forward. With the approval of the ETFs, it was a second move forward. I think clearly we're all waiting for big banks, bulge bracket banks, to start to custody and hold Bitcoin. That'll be the third big shoe to drop. There's a tension between the 21st century and the 20th century. In the 20th century, company comes public. It cost $100 million in 4 years to go public. I know I did it in '98. In the 21st century, I can create a public crypto token in 4 hours for $100. So you have 100 million companies that want to be publicly trading an asset 1 million times cheaper, faster. That's the crypto economy. The traditional economy is you take 4 years, you spend $20 million a year on compliance. And I think that the two sides are talking past each other. But clearly, the future is faster, smarter, stronger. The political winds have shifted, and I would say that, at this point, the Republicans have shifted to way progressive, and the Democrats are drifting to the middle in terms of their view toward crypto and Bitcoin. You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Saylor challenges conventional macroeconomic metrics, arguing that they are often manipulated to fit specific narratives. Metrics like labor statistics and inflation figures are selectively measured to create desired outcomes rather than reflect the true state of the economy. In contrast, Bitcoin stands out as an alternative, free from the distortions of traditional economic systems. Saylor also emphasizes that major corporations like Apple, Amazon, and Google will leverage their long-standing relationships to swiftly acquire large amounts of Bitcoin through a spot ETF, avoiding the complexities of purchasing the actual commodity. This highlights the transformative potential of cryptocurrencies within traditional financial systems. Michael Saylor stresses the importance of embracing digital currencies as the economic landscape shifts rapidly, urging investors to capitalize on Bitcoin's potential for a more prosperous financial future. What are your thoughts on Saylor's latest interview? How do you think Bitcoin's trajectory in the coming months will affect the crypto market and the broader investment world? Let us know in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.